Greetings. Greetings. Welcome to African Voices. This is episode 3. This is a show that's dedicated to conversations about Web3 technology on the African continent. We are going to be continuing our conversation that was started last week with Aurelio. And for those of you who missed that, I recommend that you go check the show out, but I will briefly do a recap of some of the salient points that we discussed. The show was dedicated to exploring the idea of decentralized finance and what's happening in East Africa. And most of the last show was centered around the discussion about the context and understanding what the situation is in East Africa. To this end, basically, we're looking at, East Africa is about 10, 11 countries. We're looking at a population of about 330 million, which is about, that of the US. It covers an area that is about 5 times the size of Texas. So concentrated. And yet, the GDP, if you look at the numbers, it's approximately, on average, about $1,200 a year annually. So we're looking at about $100 a month. Okay. A population that is, 75% rural and 25% urban. So large populations living on about, $100 of income per month, and then basically in a rural setting. And so this raises all kinds of questions about, access to finance and business and what have you. We also discussed that the economy, the small, medium, micro enterprise sector sort of contributes to about a third of the GDP. So it's something significant and employs a significant proportion of the population. So how do we make commerce happen at that level? And what are the challenges? And can DeFi really help? So I'm going to bring on Aurelio to continue that conversation. Aurelio Mofuga is from Umoja Labs. So without further ado, Karibuni, Aurelio.
Thank you, Karim.
Karibuni, welcome. How are you doing
Asante
today?
sana. I'm doing well. How about you? How is Kenya?
Great. Kenya is fine. I'm on the Indian Ocean coast, so we had a nice day. It's a good day today. How are things? Are you in Dar es Salaam?
Yes. I mean, Dar es Salaam is pretty chilled this week. Yep, a bit
Yeah.
sunny, but all good.
And it's December. Wow. We're coming into our summer.
Yes, end of the year.
I'm just curious, a little bit of trivia. Did you see the Google Doodle today?
No.
It was about Ahmed, the elephant with the huge tusk. He was a sort of a national figure animal that roamed around in Marsabit. So Google was recognizing this elephant from Kenya. Cool. So what I'd like to do is continue our conversation from that we had started last week, and we were talking about decentralized finance in the East African context, and particularly aimed at how we can help small, medium, micro enterprise firms, organizations, right? And you gave us a little bit of a definition talking about, it depends on who you're talking to, but it could be related to the size or the income or the number of employees in that business, right? But we did agree that it plays an important role, and some of the challenges are around being able to access finance. Now, you are with Umoja Labs. You've done a lot of work with humanitarian assistance and blockchain. Tell us a little bit about Umoja. What does Umoja mean for our listeners out in America?
Yeah, so umoja is a Swahili word. Basically, what it means is unity. So I think we take pride as Africans in unity and in a lot of things that we do, right? So umoja, shirikianos, meaning like coming together, sharing, doing things together. So I can say that kind of builds to the vision of having financial systems that are interoperable, that are inclusive. So the name and the vision of the company borrows a lot of what it means literally. So, however, that is translated through the projects and the products that we are building. Our initial focus was in humanitarian aid. So, to give you a recap, we were founded in 2020, and our founders came from technology and humanitarian work. And basically, throughout this time, our work has been focused towards digitizing humanitarian aid and development sector. So I think if you look at the countries in the global south, a lot of sub-Saharan African countries, the same for APAC and LATAM, the development sector has played a crucial role in each of these countries. However, it still remains the same way it was done previously, right? So I'll give you a good case of like humanitarian aid. So there might be a crisis right now, a good case, even right now here in Tanzania, there's an ongoing crisis in Hana. So how would aid reach these people, right? So you need technology that is robust, that can be capable of delivering aid to these people swiftly, very fast. Also, supporting use cases, because in a lot of situations, these humanitarian issues can be predicted. For the case of like conflicts, you see a conflict right from when it starts, from like when it's still, we can say, sparks until it becomes a fire, and then it becomes a blaze, a full blaze. So you need solutions that can be scalable, that can deliver aid in a more inclusive and dignified way. And that's why Umoja was founded, to deliver aid to some of the remotest places with technology that is fully interoperable with mobile money and banking. And with that, we also not only empower the recipients as well, but also we also empower the other value chain within these ecosystems, like the vendors, these small and medium enterprises that we get to work with. So I can say it's a full suite of products. It comprises of wallets that help recipients to receive products, as well as modern point of sale systems that run right from the smartphone. And this helps the vendors to sell, to track their records, which also powers their growth, as well as products like credit and FX hedging. I think, as we know, the Kenyan shilling has lost so much value as of late. Same for Nigerian naira, as well as Tanzania. If you're in Mexico, it's also the same. So we build all these products to help people to access means of building wealth, as well as stay protected for the case of fiat and crypto hedging with Bitcoin and Ethereum. I think you're on mute.
Good point. Good point. Thank you for that. Sorry about that. I was just saying that Umoja can also be understood as being, as togetherness, cohesion, solidarity. And I think what you are aiming to do is look to see how you can facilitate financial inclusion. You're addressing issues around poverty alleviation, right? To the end of promoting economic growth, and in a way that is transparent and accountable, because um, countries in the global south are known for corruption and things of that nature. So before we get into a little bit about decentralized, so let's get into decentralized finance, and this is something that I think you talked about last time, is that it's a variation of traditional finance. So um, the key feature there is that there is no um, intermediaries to facilitate this. The transactions are undertaken in what is known as smart code, basically smart contracts, which is basically code. And you can have applications such as exchanges, lending and borrowing, things like the establishment of stable coins and things like insurance. So that all could be done sort of without intermediaries. And what I think the bottom line is that it facilitates uh, that much more efficiency and can lead to sort of better rates and faster transactions at lower costs, lower fees. You did talk about last time about the challenges that you had about moving money across the border when you come to visit, and the fees that are charged and the challenges that you face in transacting with money. And so decentralized finance and blockchain in general could address some of those issues. You did raise something about Goldfinch, and can you tell us a little bit about what Goldfinch is and how you're related to them, what they're doing, and how this fits in to this vision that you have about financial inclusion and economic growth?
Yes, I think you've managed to recap a lot of things that we highlighted from the previous discussion. So to your point, Goldfinch, I can say what they're building is a decentralized credit protocol, and they have been one of the very earliest entrants, I think, who came with a protocol that invests in real world assets. So I can say this is different, unlike the DeFi, the first version of DeFi, like yield farming or staking, where you just put your money and then you are promised to receive exorbitant returns, right? And then you don't know where the money was invested or what it did. But for protocols like Goldfinch, it means that the money is taken and it's invested into real world projects that are making impact, the likes of companies like Tujende, the one we've mentioned here in Kenya. There are a number of companies that Goldfinch has invested in. So I think they're doing a very great job, especially given that this industry is pretty new, and also for the impact that they've been able to make, because they've adapted this B2B model. So far, to recap on the trends of what we've seen for DeFi here in East Africa, right? We are yet to see retail lending experiences. And by retail, I mean you, I, or anyone just having their own wallet and then being able to access funds on their wallet conveniently. So what we see right now is mostly B2B lending, whereby you see companies like Goldfinch, all ourselves, Umoja, we go to businesses that do asset financing, that do microfinancing, that do different kinds of investment to customers, right? And then you extend a credit line to them that can be $1 million or upwards, that can help them scale, increase their loan book value, means that they are able to reach more customers and they are able to make impact. But also for them as well, you're helping them access this capital in a more affordable way. Because if they were to go to a bank, let's say you want a $10 million loan, a microfinance bank obviously cannot lend you that. A common bank, yes, can lend you that, but it might come with higher fees as well as a collateral. There's a whole lot of processes to get it. or sometimes it just a single bank can do that. So you might need to bring in 2 or 3 different banks for a single transaction. So negotiating the terms, all these make that whole experience difficult. So that's why you come to see DeFi coming in to help to solve this mystery here. And the impact it has created is to the people, we can say, because each of these businesses work with real individuals we see in our markets. So the likes of Mama Mboga or Mama Lishe. For the context, Mama Mboga, Mama Lishe, these are like very small corner stores that sell like veggies or fruits. Their capital is usually very small, or we can say boda, the bike riders that transport us every day in Nairobi, in Tanzania, all over the whole of East Africa. So being able to reach out to these people, you empower them. First, you're serving issues like unemployment, which has been so high and still rising, right? And also you give them means for them to earn an income that also trickles down to their families. So in the end, it's a win-win. The industry prospers, also for the consumers who get to access these assets, they also prosper themselves and their families, and for the companies also gets to grow. Some have been fortunate, have even spun out of Africa. So it's quite an amazing impact, what you can say. And fortunately, it's all powered by these, by the lending experience brought about by DeFi.
So, what my research told me, and what I'm hearing from you is that okay, so Goldfinch is a lending protocol, right? And it's based on the Ethereum blockchain, right? Um,
Yes.
they're dealing in real world assets, and I think what they're doing is they're trying to find ways to connect sort of global investors with borrowers in sort of in emerging markets. Is that fair to say?
Yes.
And so they're trying to make finance possible. And I think if I understood correctly from my research, is that they're not necessarily using collateralized loans. And the way they
Yes,
address this issue
uncollateralized.
is by using community backers. So it's a community-based solution who do the KYC, and they are rewarded for helping identify individuals. So it's like that sort of like folks in microfinance who really understand the context of in which they're operating in, and maybe being able to identify individuals who would be successful at getting loans. What I heard you say is that
Yes.
it's sort of like a B2B solution, right? So Goldfinch is making access available to, say, an aggregator of people who can retail. Is that the way to say it? Is that it's a
Yes.
business to another business who then lend money out to individuals at the sort of like the consumer level. Is that fair to say?
Yes, exactly. It's like having a small, is typical even for banks, right? So we can say there are microfinance banks that need to lend to people, right? But then sometimes they run short of their liquidity that they have to be capable of lending to let's say 1,000 more, because maybe the limit is capped at like 500, right? So in that case, Goldfinch might come in, or ourselves as Umoja, or any other credit protocol out there might come in and then extend that loan to them uncollateralized, meaning that they don't have to bother putting down a collateral, which is different, unlike in the banking experience where you have to put a collateral of upwards to like 125% of the loan value that you're taking. And that is the case for markets like here in Tanzania. So being able to access that uncollateralized loan, that also means they're able to extend that to their customers. And to your point, when you were discussing the model that you have is uncollateralized loan first. Second, you have people who do the what we call the underwriting process. So it's a common process done even in the traditional finance. Basically, it's reviewing, taking your details, yourself as Karim or myself, right? So I'll submit my details to the bank, or for the context of our conversation, to Goldfinch, and then they would create something what they call a borrower pool, right? And within that borrower pool, so you would check for different elements, basically what the banks would check, but this time it's not checked by maybe a credit assessor who you would typically find at the bank. This process is delegated to people who are professionals, but also work within this DeFi project. So for the case of like ourselves as Umoja, or credit, or like Goldfinch, right? So you'd have people like liquidity stakers or backers who in the end, who pledge their capital. So they pledge their capital and do the assessment for that business. And it's a fairly complex model, but what you can say is there are people who are willing to put a stake. So you would, within each pool, you would have like a junior pool and a senior pool, right? So a senior pool you would expect to be more stable, but that gets less returns compared to the junior pool. So the junior pool would get subscribed, and more and more capital would flow into that. So there are people who are willing to pour their money into the junior pool, and then take the risk of assessing these businesses, and actually guaranteeing that in case these businesses are incapable of paying these loans, that means our capital will be first. It will be a first loss capital, that kind of model. So it's kind of like an insurance that cushions the whole loan and secures even the senior pool. So it's a fairly complex model to explain it, but
Sorry, you were cutting in and out
that's how
there.
it, okay. Maybe I could repeat a bit from where I started, right? So as I said earlier, you might have something like in each pool you have two sub pools within that pool. So you can say like a mini pool and a bigger pool. So there's a senior pool and a junior pool, right? It works the same even in investment. So you want to invest in riskier assets, then you take the junior pool. That means you're guaranteed to be repaid, but your investment might be slightly more riskier.
Hey everybody, just understand. I know they're in Africa and with the internet service, so just give it a second. I'm just hopping up and enjoying the conversation. There he is. How's it going, Aurelio? I was just hopping up. I know some things are in and out.
Yeah,
But
all good now.
I could hear you. You were clear. It wasn't breaking up. So if you could continue, appreciate you, brother.
Yes. So as I said earlier, that the process of underwriting, even for the traditional finance, and still even when you take it to the DeFi protocols, is pretty much the same. However, the difference for the banking is done by within the bank, or by what we call credit rating agencies, the likes of Moody's or Fitch, that we see out there. But for protocols, is the people who are investing in these projects. That means if it's you, Ray, right? You have the trust in the company that you're lending to, or if it's myself as Umoja, that means I take that risk of assessing this business and guaranteeing that I believe that Ray, if I borrow this money to Ray, Ray will be able to take this money and finance that Mama Lishe or Mama Boga or Boda Boda or whoever needs that money, right? And so in the end, what you have is a system that works, and also you also get to do to ensure that the money that you raise gets to reach the right people and makes the right impact that you need. So it's good to have you back, Karim. So I was just wrapping up on that process. Yes. Also to mention that I think I highlighted in the last discussion that a lot of these processes are done. So you might find that a loan is done in what we call Web3. So for context, Web3 is like any process that is facilitated by blockchain is Web3, and then Web2, any process that is facilitated in the world that we live in. So you might find out that a typical loan can be initiated in the Web3 ecosystem, the kind of a loan that you might need to get from Umoja or Goldfinch or anyone, right? But then a lot of legal processes are still done in the Web2. And that is also to ensure that these funds reach the right people. So that's it. Unless there's something else you might want me to highlight.
So what I get is that there are day-to-day type processes and procedures that take place in a sort of a Web2 world, right? So somebody would come to Umoja to get a loan or use a Web2 application. Is that correct?
Yes. So they would come to.
Yeah, go ahead.
So the way how it would work, they might come to us, get a loan, and then you create what we call the borrower pool, because we have the technology, or else you could have let Karim wire that funds to me directly, right? But then there won't be, unless that money passes through a smart contract that keeps track of the conditions that you and I had agreed, it will be harder for you to take back or to recoup that investment after it has been done. That's why you need these protocol, the likes of ourselves, like Umoja or Goldfinch, that come in. And a lot of this process still is taken off-chain, especially when it reaches the underwriting, and when you need that money to reach the end borrower, who is your business, that money needs to be off-ramped. So it needs to be withdrawn and converted from the digital dollars that you have. It could be USDC or CUSD into fiat. So that can be USD or Kenyan shilling or Nigerian shilling, because in the typical world, if you want to buy like a motorcycle, you either pay in dollars or Tanzanian shilling. You pay in the currency denominated for that country.
So help me understand a little bit about how is the risk managed in all of this, right? And I also understand that from our conversation last time is that, okay, the loans can be made at a significantly lower interest rate. So if somebody were to go to a bank to buy a motorcycle, they might be looking at 18%, right? But through this process of decentralized finance, you can make it available for a lot less. But and what is that spread? And help me understand the risk. Who's taking risk, and where is it happening?
Yes. So as I said earlier, in the banking process, right, you submit an application to a bank, they would review it, they would assess you based on how they perceive you to be risky. That's how they charge you, right? And that also determines the collateral that you have to submit in order to secure that loans. So if I want to borrow like 100 million Tanzanian shilling today, either might have to submit a fixed asset like a house or a mortgage or whatever that is fixed. So anything that they can be able to secure, right? So in the context, that means the bank just hands you money, right? They would hand me 100 million that I need, but they will also take my collateral. In case I'm incapable of paying at any time, whether I've paid half of that money or not, they can seize that collateral and sell off, and then be able to get their money back. So that's why you get to see, like in the banking sector, the loans are always over collateralized, meaning that to also factor in economic factors that might happen, right? Like devaluation, inflation, etc., right? So coming to the context of decentralized finance. So you have, we said earlier that this whole process is decentralized, meaning that it's free of having like middlemen like banks or these other intermediaries you would likely have in the typical banking experience, but still you need to have like underwriters who review these documentations and review these businesses. So these are the ones that undertake that risk. So there have been different iterations. So in the earlier versions of like DeFi, you'd have to pledge a collateral and then be able to borrow. So I can tell you, a good example is like when you do margin trading. Margin trading happens when you have, for example, I have $10, but then I want to borrow more than what I have so that I can trade maybe Bitcoin or Ethereum and then be able to return it later and get some profit. It's very sophisticated product, usually accessible to institutional investors, right? But that is also a good case of what you can do in DeFi as well. So you can pledge your collateral and then get to borrow. So that was in the early version of DeFi, also in some products for DeFi. Now you move on to uncollateralized lending, right? So what you have here is a group of people who say, I am willing to give you my money, but since you're risky and you're not pledging any collateral, I will charge you extra in case you fail to return that money. If you are able to return it, that means I would have somehow made a lot more to recover that risk that I might have incurred in case you fail to return that money. So a good example of how like Goldfinch work. So they would have like two borrower pools, kind of like senior and junior. So one group pledges to invest in a riskier pool, meaning that in case the users, the borrowers default, that means their loan, their money will be taken first, right? So it's what they call the waterfall structure. So in case the borrowers fail to repay, that's a first loss capital. So because of that, they get to be compensated earlier, and also they earn higher returns. And I think there was a question in the chat as well by Leila. So what we can say, this model has been effective. So it has been effective in a way that it has worked. There are companies that have been that have followed through this model in Africa, in LATAM, across different places. It's been effective in extending the loans to people. However, there are systemic risks. I don't want to say that these risks are due to the structure of how DeFi works. Rather, it's more on the internal processes of a business, right? So there was one case here in Africa. So one of the borrowers, I believe, I can't remember the exact amount, but they took a loan and then halfway through it, they defaulted, and then they couldn't repay that loan. So because of that, because of the fact that that loan was uncollateralized, it also means that they've had to go back and do restructurings and discuss that, like, okay, so in case you can't repay this within the time frame that we had agreed upon, then what are other alternatives that we have for us to regain back our money, right? And that was because there was a misallocation of funds. So it's more on the internal processes according to the documents by the lender It's more on the internal processes of how that organization managed the funds rather than how the system has been set. So I think coming back to the question, right? The whole structure works. If you're able to provide loans to these businesses, yes, it worked. Each of these businesses were able to access these loans that they needed to grow. However, the challenge still goes back down to governance, how that entity is governed. So if there isn't strong governance or if there is a breach of contract, which was the case for this borrower that we've seen here in East Africa, so you would definitely expect that they would default, and they definitely defaulted. And I think almost I don't remember the exact figure, but that amount was written off, and it's almost 4%, if I'm not mistaken, or 2% of the entire loan portfolio of the lender. So that's quite challenging, because you would expect that this money should come back, be returned to the investors who gave you their funds for you to lend it, but then it's all lost, right? So that's quite challenging, but I think it's more on the structures and the governance of the entity rather than how the system, how the DeFi experience has been structured to work.
So what I'm hearing is that, okay, the decentralized finance aspect of it is making credit and funds available to, say, a business who can then lend and use community work people in the community to identify potential businesses. So in that case, the business is kind of doing the work of sort of what a bank would do, right? Assessing projects and right. So that raises the question: how does the government perceive this, and what is it doing to protect individuals or citizens? What's the case there, and what's your experience in Tanzania?
Yeah, so that's a pretty tricky question, but I can say this. In a lot of contexts, and this might come from assumption based on what we've seen. So in a lot of contexts, these loans are out of traditional lending, right? Right, banking or microfinance, right? So, and unfortunately, the regulations for the case of like Tanzania, Kenya, and the rest of the world have been shying away from crypto, from DeFi for quite a long time. So that puts a challenge to the consumers themselves. So you can't really ensure consumer protection in that case, as well as the protection of the service provider. So you can say it's a challenging situation, since the whole lending experience in DeFi is not regulated, because basically, like, they don't recognize this technology that we bring sometimes, right? Unlike I can say recently there's been slightly uptake and willingness for them to like, guys, come, we can sit down, we can discuss, we can explore this technology through means like sandbox. So I can say for the case of like Tanzania, they've I'm not sure if they've passed, but there was a regulation, a fintech regulation, sandbox regulation, and the sandbox is basically like allowing you to come in and play and experiment your products in real world situation, meaning that it's an opportunity for both you, the company, to see what are the capabilities of that technology, but also for the bank itself, the regulator, to get to see how they can regulate this technology, because they care about, I can say from the regulator's perspective, they care about a few things, like consumer protection. They want to ensure that the consumers are protection all throughout. Second, the service providers as well. The entire financial system is secured, meaning that you can track and trace how this money moves in and moves out, and make sure that the processes are followed. So with passing of the sandbox regulation, you would expect at least there will be a willingness for these regulators to come and sit down with with these companies to discuss. But right now, we still I can say it still remains a mystery, right? Because in the absence of regulation that recognizes DeFi, it will be difficult for you to recoup investment in this case. So and I can also give the case of previous experiences where there were these digital applications that lend to people. One of the company, I think that was operating between 2015-ish here in Tanzania, at some point they couldn't get back their money because they had lent and then lent this money to the public, and then people weren't paying back because it was as easy as like borrowing with one SIM card, and then the next day you just destroy the SIM card and then you're free, right? So at least right now we see the rolling out of like IDs, and each number is linked to an ID. So these are structures that help to secure the system. It has taken a while to secure this system, but we are still yet to see similar experiences being taken into DeFi, because basically there isn't recognition of DeFi, of blockchain technology within the financial space in these countries that we operate in. And to give also an example, some countries, I think we can say almost every central bank has issued what they call a directive that the banks, the mobile money are prohibited, strictly prohibited facilitating these transactions. So that's also something that can tell you how the industry has been is kind of delayed in that sense.
Okay. And tell me a little bit about sort of the infrastructure that is used to support all of this. What is the state? And I know that there are some differences between, say, what's happening in Kenya and Tanzania, but can you just speak to that?
Yeah.
What have you observed?
So I think in a lot of contexts, the infrastructure takes almost the same architecture. Basically, you have what we call a decentralized application. So it's a DApp. What is a decentralized application? It's basically an application that is built on top of blockchain. So it's called a decentralized application because it's built on top of blockchain. That means it runs fully on smart contracts. So you would expect to have a smart contract written. And the smart contract is basically like taking an agreement that you would have in a physical piece of paper into an automated code that can self-execute right when that condition is met. So I can say when it reaches maybe 9 p.m. tonight, I will wire 10,000 to you, Karim, and I sign it with my pen, right? And then so the alternative of that would be writing that execution in a piece of code, and then we put it in an application, what we call a decentralized application. And then when that time reaches, provided that I've maybe linked my wallet to that smart contract, it will self-execute, and and 10,000 will be wired to you directly right at that moment. So that is just to give the architecture. You would have the decentralized application. Within that decentralized application is a computer software running on blockchain. So that can be maybe public blockchain, the kinds we see like Ethereum or Avalanche or any other blockchain out there. that also means each of these transactions can be audited, right? So you have a decentralized application. Underneath it, you have smart contracts. And each of these smart contracts define different terms of the loan. So that can be like loan maturity date. So if I borrow today, maybe you're expected to be able to repay that by next year. So you can define that in that contract. Or you can say something like interest rate. That also gets like every term. Take that 3-page, 4-page that you would sign at a bank. It's all whole translated into a code that will self-execute within in that application. And that also means you take a lot of back office processes that would expect to see in like a bank. So I'll give an example. If I were to borrow today, I would have to pledge my house or a mortgage that I have, right? And then because of that, you would expect the what they call realtors, I think, to come and then value that house based on where it's located, based on a whole lot of categories that they might have. So it's a whole back and forth processes that in the end, you might expect at least a loan that could have been signed today might take at least a week or even months to get fully delivered to me. While on the side of DeFi, what you see is just a smart contract, and all it checks is just are these terms met? If the terms are met, then it proceeds. It keeps on executing. So it brings a lot of efficiency. Also removes a lot of middlemen. That also cuts the costs that you would expect, and also it's efficient because unlike having someone having to track multiple loan accounts, this one it can be automated and everything runs within the system, meaning that it's easier to track repayments. So even the borrowers can get reminded when they have to make a repayment. Even for yourself, you can also see how the repayments have been made. So that makes the whole process easier. So there have been extensions. The core of that is the decentralized application that I've been explaining all throughout. But you can also build interfaces on top of it, like a web application, which has been the case for a lot of these products that we are seeing, like Goldfinch, even ourselves as Umoja. So you build an interface on top of that web application because you need people to see and to be able to interact with this application the same way you interact with YouTube right now as we are speaking. So you need a similar experience for people to be able to interact with this application. And on the other end, you might also need financial providers like banks. So banks or mobile money. So still you have the decentralized application sitting here. You have the interface where there's a web app or a USSD or whatever interface that you want to enable for people to access, but still you would need financial systems that we see in the current world, like mobile money or banks, because these are the channels through which you need this money to reach to your end borrower.
So what I'm hearing is that it's like the service provider, like say, so Umoja Labs is really engaging with the DApp to secure the loan. So that's one side. That's and then there's a whole nother dimension, is that how do you make that money available to an individual on a farm or that mamamboga, right? And that you need some you need to rely on existing processes and things like, say, mobile money and things of that nature, right? Is that a
Yes, and
fair sort of summary? This right? And
yes, and
because of the efficiencies of DeFi, you're able to make it accessible or affordable.
yeah, so everything is it's affordable. I can tell you that from experience. Everything on chain just moves so fast. So I would give a typical flow, right? So I want to lend maybe to a boda here, right? And then I decide to start a credit protocol today. So Karim, you'd come to the protocol, connect your wallet, and then after you've connected your wallet, you pledge your capital, meaning that you give me that money in exchange for security that that money will go to the right person that you expect to lend to. Second, you expect repayment. So that is the contract between me. So the decentralized application also not only stores the transaction or automates the process, it also stores each of these contracts that you make with people between the borrowers, the lenders. The whole process is stored right there. You can take you can say it's kind of like a database that keeps all information but also executes these contracts. In the end, once that pool is fully funded, you would see the money moving from the decentralized application to the borrower that I want to the borrower that has requested. So it can be through mobile money. So they might have something like a USSD menu, star, something like that they can dial, and then they can get to withdraw their money and access it on M-Pesa, or in any other way, right? Or they could use a bank and get their money right to the bank. So the speed at which that money moves from being a digital currency to fiat, and fiat is what we refer to in the currencies that we use in the real world, like Kenyan shilling or Tanzanian shilling or even a dollar. The speed at which it can move is instant, because fortunately there have been rails that connect between this between the decentralized world and the traditional finance world. So having things like APIs, all on and off ramps, these help to connect between these two applications and ensure that the money is capable of moving swiftly. So thanks to this application, you get to see that transactions are being completed instantly. Also means that the settlement speed gets instant, but there's still a miss of that. You would love to have a feel of a truly DeFi experience, but that is yet to happen, because the moment you transfer this money to like M-Pesa, still the cost will be so high. Like the transaction costs, unlike if you had a fully blockchain-based wallet, but that would also mean that you need to roll out this solution massively out to the population, which at the current state is not possible given the regulatory issues that we have, and that is the most crucial element that we need. But if you're able to roll out these wallets massively to the public, that means you're able to slash down the costs, not only of raising money, but also moving this money all across this whole chain. So you get people who get to borrow, pay, spend everything in crypto. So this would be a very great experience. However, we are yet to see that, because despite having these products existing in the current world that we live in through the wallets that we have, but still you need the regulators to be open to accept these products and to be to allow innovators to roll out these products to the masses.
So what I'm hearing you say is that sort of the challenges of the technology today are sort of making it challenging and difficult to actually lend directly to an individual client. But if you had a say blockchain on a mobile network with access directly to an app, then maybe it might be possible, right? I think there would still be an issue around how do you vet somebody and what have you. But that I think that's where we're going. And so if it could be seamless, right now you have an intermediary that is facilitating that whole crypto to fiat exchange, right?
Yes, I would say even with things like KYC, identification for the people who are transacting, there have been applications that have been built on that. So there are a lot of companies that are providing that as a service. So if you're like you're building a decentralized application, and that is also one of the crucial areas that you want to look into. There's plenty of APIs to plug into to get that KYC data, and you ensure that this data, this money, or the person that is transacting is not the kind of a person that has been blacklisted for doing maybe criminal issues or anything. So that also helps to secure the system despite still being still still having that lacking that connection between blockchain, which you could only have if you have a fully decentralized application.
Right. So I think, yeah, I think that the pieces of the puzzle are being put there, like decentralized self-sovereign IDs and things of that nature. We have zero knowledge proofs. So that technology is there, but it hasn't been fully integrated, and it hasn't been it's not available on a mobile network per se. But anyway, I think with that, I think we're coming close. We've come to the top of the hour, and so I want to thank you very much uh, for having this conversation and enlightening us on some of the challenges and the whole idea about this. How we're using decentralized finance to support individuals, to promote economic growth, financial inclusion, and the like. I wish you well. I wish you great success. Any closing words before we leave?
Nothing much. I'm also grateful to have made a great friend like you. It's quite a very short time, I think. We met in September in Kilifi, Mombasa. So that's where all these conversations started. And I'm happy that even with the shortest time that we've been chatting through, we've been able to pull this off. And I hope that we can continue with this amazing work. I also wish you all the best to the social bees and the DAO that you're leading. These are really great conversations to bring to light, especially in these crucial times. We don't just want to be people who adapt the technology, but we want it to be shaped to the context that fits us and that saves us, saves what we really want for ourselves and our people. And thanks that yourself and Ray and everyone in this amazing team, some of the people that are contributing towards building this future. So it's quite exciting seeing where we are heading to, right from where we are right now. I can say is very exciting.
Thank you. Ray, any last words before we close the show out?
Great conversation again, gentlemen. Appreciate it. And yeah, it was great meeting you, Aurelio and Karim. This is I just love hearing about, like you said, places that we're not used to hearing. We just kind of think we're in our own bubble, but it's great to see how much is going on and people really, taking this technology and putting it to use. I was, and I don't mean to, make too much longer because it is a great conversation. But is the challenges, as you're implementing this stuff, Aurelio, is it a lot more the government? Is it kind of the citizens, kind of, people just trying to figure out how to use the technology? What's the biggest, I guess you say challenge as you guys are rolling this out? And I don't mean, like I said, it's just curious.
I don't want to blame the government directly, but Web3 being a new technology, there's a lot of challenges, a lot more than the government itself. First, the interface itself. So people would be easily and widely open to accept anything that they can easily grasp. And unfortunately, until as of late, when we are seeing new projects coming in, trying to simplify the user experience, that's when we start seeing the whole experience transformed. But even myself, it took me a while to grasp that whole experience of like having to use wallets. First of all, what's a wallet? What's an address? You know, all those jargon that comes, like what is a gas fee? So I think it's good that the user experience is getting solved, and that is the most critical piece of a puzzle. So if you solve user experience, that means people will be open to adapting it, and that also would would raise the eyebrows of the regulators, right? Okay, so we are seeing people are using this technology, so now that is becoming the mainstream, how do we actually support its growth? It was the same with M-Pesa. I think M-Pesa wasn't regulated until, for the case of Tanzania, until around 2015. That's when a law was made. All the way, I think, since 2007, there wasn't a specific law that states how mobile money or anything like that. But the regulators were open, and that is through dialogue with the innovators. Like, this could be something that can be helpful. So let's see how we can roll it out. If it can be rolled out and if it can help people, that means they also see the benefit and they let it still operate despite lacking a proper framework. So I think if it's something that is simplified and people can see the value out of this whole experience, then it can be easy. So it's upon us to simplify that user experience, communicate the values better to people, not just what we see formal, especially right now, but rather communicate like what's the underlying value of this technology, what it can do. If people are able to grasp that, then everyone will just take it easily, and who knows, one day it becomes mainstream.
And just what you two gentlemen are doing, educating people, and that is it's what's good about making content like that. So I really do appreciate y'all, and thank you. Have it at it, Karim. And hey, you got to follow these two. You got to follow these two. You see Crypto Simba down there on Twitter, and Aurelio _CSM. You got to follow him on Twitter.
Mm-hmm.
Go ahead, Karim. Sorry.
Good stuff. All right, we'll hopefully connect in a couple of weeks for a recap of African Voices. Thank you again, Ray, for all the support, and see you soon.
Thank you, Karim. Wanted to also wish holidays and to the rest of our listeners as well.
Asante sana.